Hi everybody, this is Meherban Faroogh from the 1000 Pip Club. Today is December 14, 2011. This is the last class of the season for the year. We'll get back with you again, I believe it's January 4th. Yep, January 4th, Monday. So what I thought I'd do today is just recap what we've done so far, unless there is a trade plan on the forum. Let me go and check, which by the way is really what these Wednesday classes are for. So once again, just to recap, if you can see let me just move down. You should be able to see the website now. So this is forexstreet.net, which is not the same as fxstreet.com. That's different. forexstreet.net. You need to go here, register yourself, to go to groups, and go click on 1000 Pip Club. You can see this little symbol there. I see that 13 members have joined. Thank you so much. I'd like more to join, and more importantly, those who join, and I know it's a little bit overwhelming at first, but you have to take the first step, and then Dim and I will help you along the way. What you do is you go down, scroll down a little bit, go down on trade plans, click on trade plans, go down and pick up this template. When you click on this currency trade plan template, and see, I hope my screen doesn't get jammed up. When you click on this template, there you go. A Word document opens up. That's the Word document. Let me pull this down. That's the Word document. This is the trade plan template. I've talked about it a lot in the past. If you haven't heard enough, go back to, I think it's November 16th class. Either 16th or 23rd, I don't recall, one of those two. November 16th or 23rd class, and listen to the archive. I also have that same recording on, and a little bit more detail if you went on 1000 Pip Club. If you went on 1000 Pip Club and you picked up free training down here, and the free training look at basic trade plan part 1 and part 2. I go into a lot of detail in this. It's like a 3 or 4 hour video on FX Street. If you go on fxstreet.com, if you go on fxstreet.com under webinars, I guess, and you could go by, there are a couple of ways you can go around. You can click on my last class, positional trading, and then you can click on my name right here, and you'll see on the right, you'll see a bunch of classes that we've done, right? So I believe that's the one, market review, how to write a currency trade plan. Pick up this class. This is where I explain, and it won't open right now, that's fine. This is where it will explain how to write up your trade plan. So go to this. You can also go through our 1000 Pip Club, these 2 sessions, and go through the whole list of things we have here. You should be in a reasonably good state to get started. If you haven't done this before, this is what you need to do. This is what I would recommend you do, especially if you're a beginner or somewhere on an intermediate level. I've said this before many times, I'll say it again. If you are consistent in submitting your trade plans in class, by 10th to 15th time, you should see a significant difference in your understanding of currency markets. Okay, how to take a trade, how to plan for a trade. You should significantly see an improvement. So it's kind of, life is about choices, as I say. It's your choice what you want to do. Now, once you fill this out, whatever details you have, right, just save it on your desktop and then go and upload it back on before class, right? Go and upload it back on this site, forexstreet.net. So go back on this forum. Sorry, my screen keeps going back and forth. Go back on this forum, and I believe under this same, what you call trade plans section. And I'm a little bit new at this myself, but you could reply back to this, or you can just go and create, send your plan essentially, right? Or put a post there, send your plan in, and then I will pick it up and kind of explain to you how you can improve if possible. That's what these classes are for. So we'll keep doing this till a few of you start stepping up and see that significant difference. Okay. What I thought I'd do today is 2 things. We'll do it as a game, so we'll all have some fun, including myself. but I've done this earlier on in my career, and it helped me a lot. It will help you understand parallel inverse analysis a lot better. If you're not used to, get used to it, because it works. It matters. And when you talk about risk, it's one of the risk factors. So for instance, if you're about to take a trade, and you have no clue of multiple time frame analysis, if you have no clue what the monthly chart is doing, or you're about to take a trade long or short, and just around the price point you're about to take a trade based on a 60-minute or even a daily chart, on a monthly chart there's a strong support or resistance that you're completely ignoring. Risk. You're at risk because you don't know information that is easily available to you, just like it's easily available to a lot of other positional traders or long-term traders or whatnot. You miss that information. If you don't look over information that is readily available to anyone and everyone who wants to trade, you're at risk. Same thing for Fibonacci's, and same thing for parallel inverse pairs. If you're about to take a trade, let's say on, I don't know, Euro Aussie as an example, whichever way, and you have not looked over Euro US or Aussie US, you're at risk because there could be some significant price point on one of those two pairs, and depending which one of those two, meaning is it the Euro or is it the Aussie that's driving the Euro Aussie, that's what you need to understand. So that's how parallel inverse and multiple time frames kind of comes into play. So that's what I'll try to do today. Can I get a quick why on the chat screen? Just to know who is paying attention and who is willing to participate, because I need some participation in class today. And I appreciate just type a little Y quickly. Yes, good. I see a couple of people typing it in, so I'm hoping, yeah, great. Thank you so much. So please participate. When I ask questions, please participate. The first thing I'd like to do, is your Euro charts don't match up. Okay, we'll try and figure it out. The first thing we'll try and do is do a little bit parallel inverse. So I'll do the first one with you as an example, and then I'll put myself on the spot. You can pick up any pair, any time frame. Once again, any pair. Give me any pair, any time frame. Just don't pick up any major. Pick up an exotic pair. So like an exotic pair or a yen cross is anything besides the 7 majors that doesn't have US dollar in it. And what I'll do is I'll show to you how you can guess, where the exotic is going, just looking at the majors. Okay, it's a little exercise. We'll play it as a game. We'll have some fun. I may be wrong at times, but I'll try and guess with you. But as I'm doing that, and as you think through this, listen to this archive, certain things will start resonating with you. Meaning, when I say that if you're looking at, let's say, Kiwi Cat, you should be familiar with what's happening on the Kiwi US and US Cat. It'll start resonating with you. Oh my God, he's right. I need to be aware of it. If I'm not, I'm at risk. So those kind of realizations kind of will kind of seep in to your mind. So the first one I'll pick up myself, but the next one I'll look towards you to test me out, and we can do it together. As you're doing it together, don't look at your charts. Let's just do it together. Actually, what I should do is not look at a chart, otherwise it'll get a little confusing. So on the one on the right is the exotic, and I'll keep it to pound USD for now. But let's say I'll pick up Aussie US, and I'll pick up something else. I'll pick up, how about Swissy? USD Swiss. Okay, I've picked up USD Swiss. Okay, so the exotic cross for Aussie US and USD Swiss is Aussie Swiss. I don't have Aussie Swiss right now because I'd like to guess with you. And again, there are certain candles that are pretty obvious for me, at least at my level, and hopefully I'll be right. And there are some on which I'll be doing some guesswork because of the way both these pairs have moved. It's a little difficult to guess. The whole idea is again to make you appreciate how to look at the relevant parallel inverse pairs when you take an exotic pair or a yen cross. So the one thing that stands out for me is, for instance, let's say the move from here right? This is a daily chart. I'm expanding this a little bit more. So I'll try and focus on, and what I'll do is I'll pick up and create a line here. By the way, folks, I don't have any script with me, so as I said before, I prefer doing this a little bit ex-tempo. The benefit there for you is I'm almost speaking my mind, so you can walk this process and see how I'm thinking, and you can pick up what kind of resonates with you and what doesn't. Just leave it. Okay, so let me just take this line off. Let's just focus on this drop first. So the dates I'm looking at are November 14th to November 23rd. So I'm looking at this huge drop on the Aussie. Let's see around the same dates what happened on the Swissy. What am I looking for here? November 14th. That okay. So let's pick up a line. Let's create a line. The line helps me focus on that candle. And again, you can 23rd right there. Okay. So that's the range I'm looking at. So let me just open it up very well. And here, okay. So that's the range I'm looking. These two candles, between these two markers, I'm trying to figure out. I'm looking at Aussie US. I'm looking at US Swissy. I'll try and figure out, which I don't have right now here. I'll try and figure out how the Aussie Swiss should have reacted. Now, just to be clear, let me make sure it's Aussie Swiss and not Swiss Aussie. I'm pretty sure it's Aussie Swiss, and there's a reason for that. Aussie Swiss. Where is Aussie Swiss? There it is, Aussie Swiss. So the reason I want to make sure I'm looking at Aussie Swiss and not Swiss Aussie is because as I start thinking which one is stronger versus weaker, meaning is Aussie stronger or weaker at that given period of time, during that given period of time, compared to the Swissy, then I kind of convert that in my mind and try and figure out how that would play out if Aussie's to the left and Swissy's to the right. Okay? All right, let's go with that. Now, what I look for is a couple of things, okay? Of course, the direction of that trend or direction of that candle, and the way I have it, and I'm sure if you have on your platform as well, your candles are colored. So red, essentially, or going down, essentially, is short. If it goes short, in this case, Aussie is weaker than the US, so Aussie is weak. Now, just based on this move, you can see a couple of days sustained weakness is very clear there. Now, if you look at US Swissy, same period of time, the US Swissy went up, which, shouldn't be a big surprise given that Aussie USD went that strong. So if Aussie is strong, that means US is weak, of course. I'm sorry, I said it the other way around. My apologies. Aussie US, if Aussie is weak, US is strong on Aussie US. Once again, if Aussie is weak, going down, US is strong. Which means, looking here, US Swissy, yeah, it does make sense from here, it goes up there, right? So that means US is strong, which kind of correlates to this, and Swissy is weak. The trick when you're looking at the Aussie Swissy is to figure out, just looking at this, in this, US is the common factor, right? Between these two pairs, US is the common factor. The trick is to figure out between the Aussie and the Swiss, which one would be weaker? Would it be Aussie or would it be Swiss franc? Which one of these two would be weaker? And I would tell you that based on this, and the reason, and I can say it pretty much a shorty, is because just the movement, just the length of the movement. See how sustained this move was? So this tells me that though both Swissy and Aussie were weak between this period, Aussie was far more weaker. Aussie was far more weaker than the Swiss franc. Now, if I'm proved wrong, I apologize, right? You can figure it out. It was far more weaker. Now, generally speaking, when I pick up Aussie Swiss, you should see it drop. You should see it drop. Yes. That being said, on a couple of candles, you could even see it go a little bit green. But let me see which day is this? 11:18. So on 11:18, there's a little doji, green doji. That means probably bullish. Let's see, 11:18. What was 11:18 here? on 11:18, on 11:18, there's a red candle. So let me mark that first. Let me mark that first. Mark that first. So I'm looking at the 11:18 and 11:18 here. Come on. 11:18 here. And mark it in blue. Now 11:18. On 11:18, there's a green doji, so it's kind of a bullish move, and open and close are the same, but nonetheless it's kind of a little bullish. So Aussie is a little bullish, and on this one, since US Swissy went short, Swiss was strong as well. That being said, you see the open to close, the body of the candle is more red versus green. So meaning the Swissy it seems the Swissy was more weaker than the Aussie. So my take on this would be, as I flip over to Aussie Swiss, from 11:14, November 14th to November 23rd, I would guess the Aussie Swiss to drop, but the candle on 11:18, I would guess, just based on what I've said, I would guess the candle of 11:18 Aussie Swiss to be long, to be bullish, to be green, because of what I just said. Swissy was far weaker that day versus the Aussie. Let's take a look. Aussie Swiss. Let's pick up Aussie Swiss. Oops, did I say it wrong? Let's pick up 11:14. Okay, let's see where 11:14 is. Let's pick up 11:14. There's 11:14. And where's the 23rd? And there's the 23rd. Okay. So the first day, well, it was a little red and green. Fair enough. What day is this, by the way? 15th. What day is this? 15th. What day is this? 15th. So the same. Anyways, I won't waste time here. But overall, you can see it went short. This 18th candle, though, what I thought would be green is not green. My bad. Why is it not green? Aussie Swissy was strong. I'm sorry, because Swissy was strong. Swissy was stronger than, yes, I said Swissy was stronger than, I said Swissy was stronger because Aussie was strong, but Swissy was stronger than Aussie just because it was too much red versus green. So which means in terms of Aussie Swissy, this is one of those times I have to apologize because I confused myself. So on this day, Swissy was stronger than Aussie, sustained more than that. So it should have been red, not green. My bad. But that's the logic. Okay. Another thing you'll observe now when I say parallel inverse, right? Now in this case, and I'd like you guys to kind of say yes or no, or just type parallel and inverse depending on what you think it is. Is Aussie US parallel or inverse to Aussie Swissy? Is Aussie US parallel pair or inverse pair to Aussie Swissy? Could you type it in, please? So if you think it's parallel, just type parallel, meaning whichever direction Aussie US, when I say parallel, it means whichever direction Aussie US would go, the same direction Aussie Swissy should go. That's parallel. If it's inverse, meaning if it goes short, if Aussie US goes short, Aussie Swissy should go long. It's parallel. And the reason, guys, it's parallel is because Aussies to the left of Aussie US and Aussies to the left of Aussie Swiss. It's parallel, correct. Let's go to the other pair, US Swiss. Is US Swiss parallel or inverse to Aussie Swiss? Is US Swiss parallel or inverse to Aussie Swiss? What do you think? Is US Swiss parallel or inverse to Aussie Swiss? It could be a little bit. I'm not getting anything in the chat box, so maybe it's a little delayed by end, I'm not sure. So type a P if you think it's parallel, type a I if you think it's inverse. Is US Swiss parallel or inverse pair to the Aussie Swiss? Thanks, Harvey. Guys, I need some more participation, please. I need more people to type in. Take a guess if you take a shot at it. Is US Swiss parallel or inverse pair to Aussie Swiss? And guys, as basic as this sounds, I promise you, this is a very important piece of your education. It's very important that you understand this. If you don't understand this, you need to spend time to understand this, and I'll be willing to do as much as it takes to make it through to you guys. So is US Swiss parallel or inverse to Aussie Swiss? Okay, so I've got a couple of inverses, and Linda's saying one stronger than other, but both going up. Okay, so the funny thing is the US Swiss is also parallel to Aussie Swiss. It also is parallel because Swiss is to the right of US Swiss and Swiss is to the right of Aussie Swiss. It's the same logic as Aussie US. In the Aussie US, Aussie is to the left. Aussie is to the left of Aussie Swiss. In US Swiss, Swiss is to the right of US Swiss as well as to the right of Aussie Swiss. So you really want to see Aussie Swiss fly is when either direction, long or short, is when both the Aussie US and US Swissy either go both short or both long. There would be such a huge move on Aussie Swissy that you cannot imagine. So Bucky says one must note which of pair is first. I guess what you're trying to say is which one is driving, right? So which one is the driver? Yeah, and that's the whole point. Once you understand parallel inverse pair, guys, you need to understand which one of these two currencies. So if you're looking at Aussie Swissy, the whole idea of looking at the parallel inverse relationship, Aussie US and US Swissy, is to figure out before I take a trade on Aussie Swissy is which one of these two. Is it the Aussie or is it the Swissy that is driving the Aussie Swiss, right? And that does kind of tie back in a lot to what the US dollar is doing all the time, right? The first thing you want to figure out is where's the US dollar. That's the first thing I hear from Jeff. That's the first thing I've learned. What is the US dollar doing? And then what's the safe haven? Where's the risk on or risk off? And then kind of go into and figure out what's driving really Aussie Swiss. Is it the Aussie or is it the Swiss? So you always have to figure out the driver. That's the whole point. Again, and it's not just as simple as the Aussie and the Swiss. It goes back to really what's driving the Forex market at the given point in time, both from a fundamental basis and both from a technical basis. Anyways, that's a sideline discussion. Okay. I think, so my take here is that some of you are pretty good at this and some of you still need to have a better understanding of parallel inverse, right? Let's do this more. So this time I'll put myself a little bit on the spot. I'll ask you to give me a pair, give me any pair, any time frame. Just don't go to a minute, 1 minute time, 1 or 5 minutes, right? Go to a monthly, weekly, daily. You can pick up a 4 hourly, you can pick up an hourly. I'll be fine, no worries. And this goes back to, and pick up any exotic pair. Give me one exotic pair. Pick up any pair. Aussies, Euro Swiss, Aussie Cat, Kiwi Cat. There are 28 pairs out there, right? So I'm saying look at this whole list and give me any pair except the majors, because the majors is what I'll analyze for you. Okay, so Meena comes first. Oh, wow. You guys really want to put me in the spot, eh? Okay, so I'll pick up Aussie Cat. And let's go with that. So we'll do a little bit of Aussie Cat first. Okay, so I won't pick up Aussie CAD. That's the one we're analyzing, right? So to do Aussie CAD, and guys, I want you to participate. Which two pairs should I look at? To analyze Aussie CAD, which two pairs should I look at? So type this out quickly and let me know. I'm running short of time here. To analyze Aussie CAD, which two majors should I look at? Aussie USD and USD CAD. Perfect. Okay, so let's do that. So Aussie USD, I already have Aussie USD up, and you mentioned, and what time frame? Veena, since you put up Aussie CAD, I'll let you decide the time frame. Just so you make sure there's no way I can have possibly reviewed all 28 pairs, multiple time frames. How often should we do this? This is initial practice. I mean, I don't do it now, of course. Once you feel you're getting good at this, you can stop it. But if you're new at this and you do this, a few bulbs will go off. Which is why, again, I want you to submit your trade plans in class. So, so Veena, give me a time frame. Oh, you said daily. Okay, thank you. Okay, so let's set daily. Okay, so I could pick up the same or I could pick up different. I analyzed already this time frame. So maybe just to save time, I can go over US CAD around the same. Is that okay, Veena? I could go at the same time frame, November 14th. Thanks. November 14th to 23rd, and try and see what happened on the US CAD, and then try and figure out or guess what the what the Aussie CAD would look like. And I'm sorry if I come across mumbling at times. It's a little confusing, even for me to stick and call out the right pair. Okay, 11:14 right there. And what's the other candle? 11:23. There's 11:23 right there. Okay, let's open it up and let's try and explore, rather guess. So when I say guess, I'm saying we're making an intelligent guess as to what that would look like. Okay? Okay, so I'm looking at 11:14 to 11:23 on Aussie USD, and I'll be looking at 11:14 to 11:23 on so same US CAD, same time frame, of course, daily, and try and figure out what the Aussie CAD would be doing. So the first question to you guys is, and that's what you have to figure out in your own head before you try and guess what the Aussie CAD is doing. Is Aussie US parallel? We already discussed that, right? So Aussie US is parallel to Aussie CAD. But what about US CAD? Is US CAD parallel or inverse to Aussie CAD? I'll let you type in. I'll type it in as you guys are thinking. Is USD CAD parallel or inverse to Aussie CAD? Nice. So I'm getting a couple of inverse, and that's the right answer. Sorry, what am I saying? Aussie CAD is a parallel inverse. So I'm getting a couple of inverse, and I got a few parallel. So the right answer is, the right answer is it's parallel. It's parallel because just look at the currency where it's located. On the USD CAD, where is CAD? CAD is to the right. And I'm not pulling it up because I don't want to cheat. But if I look at it this way, Aussie CAD, I'll just highlight this. On Aussie CAD, where is the CAD? The CAD is to the right. If the CAD is to the right of Aussie CAD and the CAD is to the right of US CAD, ignoring Aussie US, it's parallel. USD CAD is a parallel pair to Euro CAD, and Aussie US is also a parallel pair to, I'm sorry, I said Euro CAD. Aussie US is also a parallel pair to Aussie CAD. Okay, so these are both parallel pairs in this case as well. Okay, let's analyze them. So the first thing I notice is, if it doesn't make my life easier, is Aussie USD is going short and USD CAD is going long. Okay, so you would say, oh my God, because in this case, both Aussie and CAD are stronger than the US dollar from start to end. If I just look at from the starting point to the end point, because Aussie US is going short, of course, Aussie is weaker than the US, right? And because in the US CAD is going long, which means CAD is weaker than the US, or US is stronger than the CAD, whichever way you say it, right? So between these two pairs, right, it's both Aussie and both CAD are weaker than the dollar, okay? The challenge is, if I had to guess what the Aussie CAD would be looking like, now in this case it gets a little difficult, and I'll tell you why. And I'll probably still take some guesses. It's difficult because the movement, and that's what I want you to understand, the movement from start to end is almost the same. The pips, the number of pips it's moved is really sustained. If I'd seen a weaker move on US CAD, a weaker, meaning it could be green, but the green candles were shorter versus the red candles that I see on the Aussie US. And I'll say it one more time, slowly. If the length of the green candle, especially the body from where it opened to close, but more or less the overall length of the green candle on the USD CAD, if that was less than the length of the red candle on the Aussie USD, our job gets easier to guess what the Aussie CAD would look like. Because if one pair, if Aussie moves far more weaker compared to CAD on the US CAD, I could easily say that the Aussie CAD is going short. But in this case, my job's become a little difficult. But anyways, that's my logic. But let's try and guess here. Maybe what I'll do is I'll do this. How about this? I'll start writing out the days. So 14th, 15th, 16th, 17th, 18th, 21st. Okay. 14th, 15th, 16th, what happened? 16th, yeah, I'm trying to write on my notepad, but my notepad will not cooperate with me. Bear with me. You might not be able to see my notepad, but I'll just put it on the side. I don't know if you can't capture it right now, that's fine. I'm still typing it. 16th, 17th, 18th, 18th, then 21st, 22nd, 23rd, 21st, 22nd, 23rd. So just so you know, what I'm doing is, if you can see my notepad, I've typed those dates sort of. I'll try and see if I can figure out a few candles right there. Okay, let me get my charts back. What happened here? Okay. And let me put these lines in a little bit thicker blue so I can see them a lot better. Because this is a little bit difficult. Bear with me, please. I'll take this 18th off for now. And we'll try and guess on some of the candles if we can. And the idea here again is to give you an understanding. It's not about being wrong or right in the game. It's more about giving you the understanding of how to look at parallel inverse and why. If I've been able to deliver that, then I'll be happy. So between these two thick lines, I'm trying to figure out what my Aussie CAD would look like, right? Okay, so let's see. On the first candle, it's a tough guess, so I probably won't bother. On the 15th, it probably is easier for me because And I'll probably type it in the chat box. That's what I'll do. On the 15th, the red candle body is less than the green candle body on the USD CAD. So what does that mean? That means, of course, even though the USD CAD went long, that means the CAD was weak, right? But what I see here is that on the 15th, the CAD was more weaker. The CAD was more weaker than the Aussie. So I would say that the Aussie CAD would go long in my guess. Now, as I say that, also keep in mind, guys, I play this as a game and I play this as a challenge to kind of improve ourselves. But there's also what you call the pips proportion, so, or what you call the pips range or whatnot. So this can be a little bit deceiving. For instance, if you picked up Euro Pound, if the Aussie US average pips range, during a given period of time on a daily basis, let's say is, I don't know, just throwing a number, 150 or 160, your Euro Pound doesn't do 150 or 160. It can do 60 or 70 at times. That'll be enough for it. So while the candle may look short, relatively speaking, it's not like a one-on-one. I just want you to keep that in mind. But that being said, you can make a fair guess. And as I said, the whole idea of this game is to help you improve your understanding of patterns. So anyways, 15th, I'm saying that the Aussie CAD, let me just make sure I'm correct here, the CAD went far weaker. So the CAD went far weaker. If the CAD went far weaker, that means on the Aussie CAD, it should be long, right? Yep. So 15th, on the 5th, please don't type in what the charts are. On the 16th, the Aussie, so let me just type in Aussie CAD 15th should be long. So Aussie CAD 15th, it should be long. It should be long because the CAD was far weaker. Okay, so that's what I say on that one. Let's look at the 16th. On the 16th, I can see a little bit bigger candle, but I'll pass that for now. Just in the interest of time, we already did 7th. Let's pick up something that's obvious. What about the 18th here? Let's pick up the 18th. Okay, let's pick up the 18th here once again. So on the 18th, I'll just do these two candles. Maybe a few more if I can. On the 18th, Aussie was strong. Oh, look at that. Yeah, Aussie was strong, but once again, on the US CAD, it dropped, which means the CAD was strong. But just between the open and the close, once again, the body can be a little deceiving. Well, the body seems to be a bit longer than, I'm just going visual, guys. I'm not even, so what I would typically do is I would click on it, look at the open and the high and the low, measure how much is the high and the low here versus how much is the high and the low here, and then kind of put it in perspective and then make a guess. But just in the interest of time and doing it visually, I'm guessing that, though both on the 18th, Aussie, and CAD both were strong, but it seems like the CAD was a little bit more stronger. It was a little bit more stronger, and just going by the open and the close. So if it's a little bit more stronger, especially in the body, I'm guessing that the Aussie CAD should be, if it was stronger, the Aussie, so if it's stronger, the CAD's on the other side, right? Then the Aussie CAD should drop. Okay, so let's see, so Aussie CAD was stronger on the 18th. So if CAD is stronger, that means Aussie CAD should go short. That's what I say on the 18th. Okay. So let's go on the pair now and try and look it up. Aussie CAD. I think those two candles should be enough. Okay. So what did I look at? I looked at the 15th, and I looked at, so what did I say on the 15th? Thank God. Okay, the 15th, I'll just mark it. On the 15th, I'll just mark it. Guys, let me just focus on the private messaging right now. 15th right now and 18th. Okay, let's look at what I said. So I said on the 15th, the pair would be long, bullish. And I said on the 18th, the pair would be short, bearish, based on what I explained. So let's take some, so that's, it turned out that way, right? And I said some of it was guess, but a lot of it was an intelligent guess based on which currency is parallel or inverse, which pair is parallel or inverse to the Aussie CAD, how much that candle has moved, in which direction has it moved, and what does that mean in context to Aussie CAD. If you do this exercise, I know some of you are still having trouble and saying, why the heck am I doing this? But if you do this exercise, it'll help you get a better sense of parallel inverse pair relationship. And a lot more, actually. It also gives you a good flow on price action. What does that mean? So let me see if I have any questions, because I'm almost out of time. 4 minutes left. So I'll take any questions now. Let's see what questions you have. Okay, let me open it up, and let's see what questions you have. Okay, I'll start from Solman, but both Aussie and CAD are weak, therefore not much change. I'm guessing I answered that question. When it says both Aussie and CAD are weak, therefore not much change, I think I must have answered that question. If I didn't, Solman, then ask me again, please. Your time periods below do not seem to be current. They are current. Okay. He's focused on the 11/15s of years in all three charts. I think you're, oh, that's the name. Meherban, could we just not measure the number of pips it moved from that period for both pairs? Yes, you could. You're absolutely right. And that takes a little bit more longer time. You could. You could measure the pips, and that's a little bit probably more precise. But keeping in context, as I said, some pairs can move 180 pips during a certain period of time, versus at the same time the other pairs are moving 120 or 110. So it's proportion. But on a one-on-one basis, if they're moving between 120, 130-ish, if you're looking at, let's say, Aussie US and USD CAD, if they're going 120, 130-ish, then yeah, if you measure the pips, it's more precise than the guesswork that I did. But the whole idea of this game was to get you start to think about parallel inverse, which is parallel, which is inverse, and what can be happening on the exotic. So it's kind of it's a workaround. It's looking at it from another point of view. Because when you're about to take a trade, of course you're looking at the exotic. You're not trying to guess. That's not what you do when you're taking a trade. But if you're guessing, you play it as a game, you get better at this. So when you're doing it in real time, you're looking at all three charts: Aussie USD, USD CAD, and Aussie CAD. It's right in front of you. You should get a lot better, in my opinion. And I'd like to know if this has helped you or not, either today or even going forward. What is the basic you're talking about? Okay, I'm not really sure what the question is. If your question is about why did I do this exercise, well, I just said that. I did that because it helps you to understand parallel inverse pair relationships. What that means is selling. Okay. How would we make use of this info? So David, as I said, you will get better at chart reading. You'll get better at understanding parallel inverse pairs. You'll get better at, if you take an exotic pair like Aussie Swiss, and if previously you were not looking at Aussie USD and USD Swiss, now you will, because you'll start understanding the importance of which pair, which currency is driving the Aussie Swissy. Is it the Aussie or the Swissy? And you do that by looking at the Aussie US and the US Swissy. If you were not doing that before, you were at risk. You were not, you didn't, that's what I have to say. You're welcome, David. You're more than welcome. Good question. See, these are the questions you should ask, guys, and I'll tell you. There's nothing like a silly question. There's nothing like a dumb question. I insist, and I'll do this. You'll see me doing this a lot of times, and I'll do this intently. I'll ask myself some dumb questions at times. When you ask questions, even basic as it seems, a lot of concepts that you think were clear start becoming a lot more clear. Okay, so I would encourage you to ask questions, even if they seem like basic, because there's nothing like a basic question. Solomon, but why buy the parallel, buy the major pairs, example, Aussie USD long? Sure, you could. That could be the result of your analysis, Solomon. So you don't have to buy or sell the exotic. Once you analyze, you can, if you find a better opportunity on Aussie USD or Aussie CAD. Here's another thing. If you're looking at, let's say, Aussie USD as an example, or you were looking at Aussie CAD and you picked up Aussie USD as an example, and the USD CAD to figure it out, and you said, oh my God, I mean, there is a superb opportunity on the Aussie USD. It's just, which you may not be aware if you from before, as an example, right? Some monthly support resistance number or Fib number or lining up with the trend, just, picture perfect on the Aussie USD. And you could almost swear by it. And you could almost swear by it that this is it, and it would go short, it would bounce here, and I could take. What you could almost do, and again, don't do it on the fly in a live account, but if you could and there are moments like that, right? Based on what your awareness is on the pair and the fundamentals, and at the given point of day and whatnot. If you wanted to go short on the Aussie USD, as an example, you could almost pick up all the relevant Aussie pairs, Aussie Swiss, Aussie Yen, Aussie Kiwi, the 5 others. And depending on what the Swissy and the others are doing at that time, you could simultaneously spread your bet. So rather than going 10 lots short on Aussie USD, you could go 5 lots short on Aussie USD and go 1 lot on the others, or you can increase your bet on these. So my point here is, when you start looking at parallel inverse pairs, a lot of other horizons, a lot of other opportunities start opening up. But the key, at least in my mind, is a lot of it has to do with the US dollar. Okay, that's why I call them the majors, those 7 pairs. I hope that answered your question. For how long would results be valid? Spooky, I'm guessing you're saying like the analysis that I did, for instance, today, 11/14 to 11/23. Well, how should I say this? So the time frames change, right? So if I'm understanding your question correctly. So every minute, the minute chart changes. Every hour, the hourly chart changes. Every 5 minutes, the 5-minute chart changes. Because one extra bar or one extra candle gets printed on the right? Every day, the daily chart changes. But guess what? The print that's taken place, or the candle that's been printed between 11/14 to 11/23, that will not change. Now its size and proportion might change, depending on how much it spikes on the right, or what bars are taken away from the left, so to say. But generally speaking, what we analyze 11/14 to 11/23, I mean, that's printed in history, in time. That won't change. On the same time frame, yeah. I think I answered your question. If not, then let me know. Oh, as fundamentals change? Well, as fundamentals change, that drives your charts, right? So if the euro, the euro is going, by the way, guys, are you noticing the euro? Oh my God. If the euro is going short, right? But a few statements from the folks up there, Merkel's and whatnot, that could change your charts on the same. So depending again, which time frame you're looking at. Any other question, guys? I think I've answered all the questions, and Dime, thanks again for, there was probably some questions up there I didn't see that she's been answering. Thank you so much. This was our last class for 2011. It's been a pleasure to thank once again FX Street for allowing us to host these classes. I'll show you in a minute how to get 3 charts on one screen. I will do, but I want to take this chance to thank FX Street, and for those of you who attend our sessions, I would encourage you to go on forexstreet.net and go over and try and submit your trade plan starting January. I know it's a little difficult. I know it's a little overwhelming, but guys, if you don't do that, I was trading forex is overwhelming. Trading forex is difficult. It's not easy. If anybody said that to you, I would strongly oppose that, right? So if you're not ready to do your own trade plans, I would suggest you're not ready, definitely not ready to trade on a live account. That's why we have demo accounts. That's why we have this kind of comfortable environment where you can ask questions. So I would strongly suggest you take that opportunity. Even if you are not able to submit the whole trade plan, just, a few lines here and there, make that effort. I want you to make that effort. And I promise you, The domain I will not be too tough on you. We'll try and be as gentle and as easy, but we can help you progress to the next level, whatever that next level is for you, depending on where you stand. Okay, with that, I'm done. One more. So that question that was asked, how you get 3 charts on one screen, here's how you do it. So I'll cancel all the charts first. So once you open up your download your trading station, whatnot, right? And you open up market scope. You open up market scope. Then you go on file. You do create market chart. Pick up any pair, doesn't matter. Pick up any pair, any time frame. The first chart opens up, and then you do the same thing, and again put up another chart, and you do the same thing, and let's say you put up another chart if you wanted 3 charts, right? In fact, let me put up a few more quickly. Let's say I got 4, right? So what you do is you drag this, you hold it, and you drag it. You see how it's being dragged, right? You drag it, you put it to the right, so that puts up 2 charts together, and you pick up another one, and you can go actually down here. You can put this one down there, and you can pick the 4th one, and you can put it down underneath. So if you wanted to see 4 pairs at a time, that's how you would do it right there. I don't like grid lines, so I take them off. And this is where I say you have to play with your charts. Download it, play along with it. You make some mistakes, but you learn from that, right? So you take off, and then you change the charts. So you can go and pick up pound USD, you can pick up whatever, USD CAD, so on and so forth. So that's how you do it. Okay, I'm done. Thanks everyone. Have a happy new year. Merry Christmas. See you next year.